Gold is continuing to push higher. It's, as I speak on the screen, $4,049, up $65 on the day. Now, yesterday I saw a very funny thing. Gold was trading at $3,977, and there was a very major, well-known investment bank, one of the biggest in the world. I won't say its name because I don't want to be embarrassing banks by ridiculing them, but I am in a way. This particular bank said gold could reach $4,000. And that was a day when gold was up $50 and almost touching $4,000. And I think, okay, so when it touches $4,000 later today, you're going to say, oh, we were right all along. Well, what about your clients? Did you tell your clients it touched $4,000 6 months ago, a year ago? I'm glad for those of you who've been listening to this channel and taken some action in that respect.
Gold has officially shattered the $4,000 barrier, something mainstream analysts said couldn't happen this soon. Yet here we are, gold at $4,049, up $65 in a single day, sending shockwaves across the global financial system. While most investors are still waiting for confirmation, the world's largest banks are scrambling to explain what just happened. But the truth? The revaluation of gold is already underway. In this breaking update, Clive Thompson exposes how political chaos and monetary dysfunction from France to Washington to Tokyo are accelerating this move, and why gold and silver investors are finally seeing the cracks in the global system become impossible to hide.
Sébastien Lecornu, he was appointed Prime Minister on the 9th of September, but of course he didn't really take office officially until he's formed his government, which was on the 5th or 6th of October. And 2 hours later, he resigned after forming the government. So he got his cabinet together. That's the group of people, his inside group, who are going to decide on policies. But there was so much bickering and so much infighting between the various parties involved. He had to resign because not only his opposition, but even his allies were threatening to bring down the government. So now President Macron will have to appoint another prime minister. It'll be about the 1, 2, 3, 4, 5, 6, 7th prime minister he's appointed in a couple of years. Can he find another prime minister to do the job? It's not a job you want to have, really, and you're never going to get any agreement about this budget. So I don't know what's going to happen with the next one, if and when he's appointed. I suppose it'll be in the next day or so. And maybe Macron himself is going to just give up, throw his hands up in the air and say, I can't do this, chaps. And he might resign. Now, I don't think that's likely, but you can't exclude it. So France is really in political turmoil. And of course, we've got the USA in political turmoil as well. So what's gone in the USA is every year before the 30th of September, which is the financial year end in the USA, they have to agree in the Senate the budget for all the government agencies. They have to authorize payment for them. And if they don't authorize them, if it can't be agreed, then the agencies, like the Bureau of Labor Statistics, for example, don't get any money. And if they don't get any money, they can't pay the staff, so they have to furlough the staff. Now, it is said that historically, and possibly this time around as well, probably this time around, the staff will get paid if and when the money is allocated to these departments. But in the meantime, it means people are not working, they're furloughed. And I know some of you will say it's kind of like a free holiday because they would have been paid at the end of September, and the next pay date presumably is the end of October. I assume they're not paid weekly. So probably this will all be resolved before the end of October, maybe in the coming days, and they will get paid as normal, but they'll have had a few days holiday. They're probably in their 8th day of holiday today. That's what some of you will say. But there's no guarantee that they're going to be paid because that hasn't been agreed. In the past, it always was that they would get their pay for the days they weren't working, but it's not yet agreed. I think President Trump has said they will get paid, but he's not making the law like that, so we'll wait and see. But the real problem here with the US shutdown is that it's complicating the Federal Reserve's decision-making process because it's limiting access to the to the government data, to the economic data. So the policymakers at the Fed are increasingly relying on independently produced data and survey information from independent organizations to assess the economic conditions. And now we mustn't forget the next FOMC, Federal Reserve Open Market Committee meeting is October 28th and 29th. That's 20 days away from today, and probably everything will be resolved by then, and we'll start to get the data again. But what if we don't? Well, there will be, if they're making a decision on interest rates, they will be flying blind. So let's just have a look at what's happening to the currencies while we're flying blind. Funnily enough, the US dollar isn't getting weaker. It's kind of strengthening against major currencies, but particularly the Japanese yen. Now, the Japanese yen fell a lot. I mean, it fell, when I say a lot, it fell by about 1%. Now, that in foreign exchange terms, that is a lot. So it fell by about 1.05% to 151.95 yen per dollar. It means to buy a dollar, it costs more yen than ever before. Let's just have a look at that chart and see how it's going, and if it's getting any worse than the 151 I showed, I spoke about. So here we are, here's the yen, and it's now 152.97. Here you see on the chart, the last day or so, the yen weakening rapidly. Why is the yen weakening so much against the dollar? Well, the appointment of a new prime minister in Japan, her name is Sane Takaichi. I'm not sure if I pronounced that correctly. She's the new party leader, and she advocates for monetary accommodation, monetary expansion, fiscal stimulus, and that reduces the expectations that the Bank of Japan will continue tightening. Tightening obviously reins in inflationary expectations because they raise interest rates. Loosening is the opposite of that. It means that interest rates come down, and when interest rates come down, inflationary expectations go up. So what's happening in Japan? The inflationary expectations are rising, and that causes the Japanese yen to weaken against the dollar. I think we should go and have a look at what's going on in gold. So gold is continuing to push higher. It's, as I speak on the screen, $4,049, up $65 on the day. Now, yesterday I saw a very funny thing. Gold was trading at $3,977, and there was a very major, well-known investment bank, one of the biggest in the world. I won't say its name because I don't want to be embarrassing banks by ridiculing them, but I am in a way. This particular bank said gold could reach $4,000. And that was a day when gold was up $50 and almost touching $4,000. And I think, okay, so when it touches $4,000 later today, you're going to say, oh, we were right all along. Well, what about your clients? Did you tell your clients it touched $4,000 6 months ago, a year ago? I'm glad for those of you who've been listening to this channel and taken some action in that respect.
As gold surged above $4,000, Clive couldn't resist pointing out the irony. A top global investment bank suddenly released a forecast predicting gold might reach $4,000, just hours before it did. It's the perfect example of how mainstream institutions react to events instead of anticipating them. Meanwhile, the world's political foundations are shaking. In France, newly appointed Prime Minister Sébastien Lecornu resigned only 2 hours after forming his government, a symptom of deep division and instability under President Macron. Across the Atlantic, the United States faces its own paralysis. Nearly 800,000 federal employees have been furloughed without pay, as Congress failed to pass a budget before the September 30th deadline. The shutdown has halted vital data from agencies like the Bureau of Labor Statistics, leaving even the Federal Reserve without clear economic indicators. Clive warns that the Fed's next FOMC meeting on October 28th to 29th could see policymakers flying blind, forced to make decisions based on incomplete data, a scenario that adds another layer of volatility to global markets. Then there's Japan, where the yen just collapsed to 152 yen per US dollar, its weakest in decades. The appointment of new Prime Minister Sanai Takaichi, who favors more stimulus and looser monetary policy, has triggered fears of rising inflation and capital flight. The yen's fall highlights a larger problem. Faith in fiat currencies is evaporating. Clive's central message to investors is crystal clear. Gold isn't just rising because of inflation, it's rising because global trust is collapsing. He calls it a repricing of trust, a moment when the markets quietly admit that governments can no longer manage stability. Gold has become the scoreboard of confidence, and right now, confidence is dying. Meanwhile, other assets are flashing warning signs of their own. Bitcoin has surged to $125,000, while Ethereum has climbed to $4,400, fueled by record inflows into crypto ETFs across the US and Europe. This parallel rise of gold and digital assets reflects a deeper shift. Investors are abandoning paper systems in favor of tangible and decentralized value. In Europe, the European Central Bank now projects inflation will fall to 1.7% by 2026, suggesting possible rate cuts ahead. But as Clive notes, lower rates mean more liquidity and more pressure on already fragile currencies. Meanwhile, central banks continue to buy physical gold month after month, regardless of price, draining what's left of global supply. Gold's current surge, Clive argues, isn't speculative. It's existential. The world isn't chasing profits. It's searching for safety.
But unfortunately, many banks like to make predictions which are not too far off the spot price because they want to stay within the bunch and they don't want to be too far wrong. And I understand that. You want to keep your job, and predicting something which is more likely than not to happen is probably a good thing. So you can go to your bosses at the end of the year and say, I made 45 predictions this year and 42 of them were right. Like, for example, one of my predictions was gold will hit 4,000. The fact you only made it an hour or two before it got there is neither here nor there. It's all to do with the statistics of how many things you got right. But I find that a little bit funny that as gold is touching the $4,000 level almost, somebody comes out and makes that little predictable prediction, shall we say. But what's happening with gold, obviously, with the uncertainty regarding the USA, the uncertainty regarding the dollar, although, which I stress, the dollar's not going down, but there's this fear that it might take a sudden lurch for whatever reason, because we don't know what's going to come out tomorrow. There might be some unexpected good or bad news, or something to do with tariffs. We don't know. Or maybe there's some investigation of an important figure, or maybe a big company gets targeted in some way, and suddenly everyone says, "Oh my God, they're targeting such and such company," and there's a bit of a panic. We don't know. So people are a little bit nervous, more nervous than usual, and I think that's why they're looking for adding some safe haven to their portfolio. Now, gold is a very small market, or relatively small market compared with other things. So a little bit of money going into gold, and I'm talking the free float of gold as opposed to all the gold in the central banks. A little bit of money going into gold is boosting the price. So I think that's kind of what's going on with gold at the moment. We've also seen, I think the figure was, if I saw it correctly, I'm just checking if I can find it now. I think we saw that there was $12 billion, and that's not a lot of money, by the way, going into the exchange-traded funds. Yeah, I don't have that figure not quickly to hand. So what else is going on? Bitcoin. Bitcoin has hit another all-time high of, I think it briefly touched as much as $125,000. But you can see it at $122,000 at the moment on the chart there. More than double the price of a year ago. And some people are reckoning they should go into it. Let's have a look at Ethereum, which is currently trading at $4,485. It's up from $2,400, so up to a year ago. So 2,400. This is the year ago figure here. Roughly $2,400. Now it's $4,400. So up $2,000. Not quite double, but kind of heading upwards. Yes, one of the reasons I see there is that there was net inflow into the into the exchange-traded funds, which back Bitcoin. They say that 5 billion flowed into the US ones, 563 million to the Swiss ones, 312 million, for example, into the German ones. I don't even know what those are, but there's net inflows into the exchange-traded funds, which are backing Bitcoin and Ethereum. So the European Central Bank is, inflation in Europe is showing 2.1% in 2025, and the ECB is predicting 1.7% in 2026. And they're predicting 1.9% in 2027. So according to the European Central Bank, they will be on target with their inflation numbers.
So where does this go from here? If the US ends its shutdown soon, will gold correct briefly? Maybe. But if the Federal Reserve missteps, or if political gridlock deepens, the $4,000 line could quickly become the new floor, not the ceiling. The real question, Clive asks, is this. Are we witnessing a bull market or the collapse of belief itself? Every sign points to a global financial reset, not announced, but unfolding silently through market behavior. The data's missing. The politicians are divided. The currencies are bleeding. Yet gold keeps rising. If you've been stacking early, you're ahead of the curve. But if you're still waiting for a signal, this is it. Gold and silver are no longer alternative investments. They're becoming the only honest measure of value left. So, what do you think? Will gold stabilize above $4,000? Or is $5,000 the next stop in a full monetary revaluation? Comment your thoughts below. Your insight matters more than ever. Subscribe to MacroEdge for deep weekly analysis on gold, silver, and the monetary shift reshaping our future. Like this video if you believe in sound money. Because as Clive Thompson reminds us, gold isn't rising because of speculation. It's rising because faith in the system is dying.